Good afternoon, traders, and welcome to this week's weekly market analysis, Monday the 19th of June. Before we get started, as always, please understand that any advice in this session is of a general nature only and that your personal circumstances have not been taken into consideration. All right, let us kick off and let's have a look at what we have coming up this week. It is actually a very, very light week in terms of data, not too much happening. I think from what we can see here, really the highlights of the week is going to be the New Zealand dollar. We can see that we have the rate announcement and the official cash rate as well. So usually we may get indications of to what their thoughts are on their monetary policy situation. That is probably the most impacting news for the entire week. We do have the Governor Carney speaking for the GBP, which I think this one may be a little bit more interesting than normal since last week when the voting for interest rates or the monetary policy decision for the UK last week was a 3-5 vote, should I say, and it's the closest they have been in a decade to the point of increasing rates. So perhaps anything that Mr. Carney says in this speech may be indicative of what the plans are, Brexit and all those types of things. So this may be slightly market moving, but nevertheless I think the most impacting is just raw data wise is going to be from New Zealand. Okay, I think for that reason this particular week, since we are so light on data, the currency to keep an eye on in terms of data, because we also do have US news unemployment claims, is the pair that's going to be most affected by data is going to be the New Zealand US dollar. Okay, it's very, very brief today. Highlights of last week, let me just have a quick look. The main one was the surprise from the UK, which I've just mentioned in terms of the voting. It was the closest that they've been to an increase in rates for a long, long time, in a decade. From the US, we had Miss Yellen was very, very hawkish in her delivery when for the FOMC when they increased rates. So what is a little bit strange is that it has not translated into effective movement into the markets so far. The best moving currencies last week were the Canadian dollar, Aussie dollar and the Kiwi dollar, so really all the commodity currencies. And the US dollar did have its moment, but primarily against the euro, not so much against the other majors. So that's pretty much the major highlights from last week. Again, for the week coming, it's very, very light. So let's stick to our our technicals, and let's see what we can see. But the Kiwi dollar is the one that's going to be the most affected. All right, let me move on and give you a quick little trading challenge update. We did trigger another trade which has now closed out. Via method 1, we were stopped out on our Euro USD sell. Okay, so basically locking in a loss of 250 on that one. But via method 2, we did hit target 1 on the Euro sell, and we got stopped out on the second half of the trade for a zero loss, so effectively locking in a profit of 125. So the numbers, actually this is incorrect, this should be 1375, this number here, okay, and that is the actual numbers via method 2. So there's starting to be a little bit of a disparity between method 1 and method 2. There usually always is, but it's always usually method 1 that comes out winner. So let's see, we've still got 9 trades to go. Let's see what ends up happening. Okay, time for me to bring my charts forward and let's have a look at what the markets have for us this particular week. If you have any questions at this stage, just please type them in and I'll do my best to answer them as we go along and as we analyze the market that is for us this week. Okay, let us start off with the Aussie dollar. Let me just do a quick little zoom out of the Aussie dollar. I just want to get a feel for it. So it's very clear that we are stuck in this range at the moment, which is roughly between 78 and about 71.5. We've been there for quite some time, so just keep that in the back of your heads. And let me zoom in a bit closer. What do we have? Okay, the first things that I'm trying to see here is I just want to draw a line across these three tops, which is going to give me a region of interest over here. And I want to also start to lock in this region here. I get the feeling that even if we bring this down, we can start to see from what I'm drawing for you a region of tightness. And let's see if we shoot forward or if we shoot out of that. In the meantime, I'm interested in any trade back into the pattern or any trade back into the pattern, provided that I have enough space to execute such a trade. So let me zoom in now and let's have a bit of a closer look. Okay, all right, so these two lines that I've drawn on my charts, they're definitely locked in. 2 points have been confirmed, nice and steady. So what we're going to look for in an ideal world, what I would love to happen is for this market to push towards this level, and if it was to give me some kind of a candle formation that looked like this, okay, where I have a really nice inside candle, then at the break of that candle I would really be looking to trade it into this direction, where I would be placing my stop above that high, probably anywhere between 5 and 10 pips on a daily chart, and I'll be targeting, you could see that visually 2 to 1 target is over there. When I talk about 2 to 1, just in case there's anybody new in the room, I'm talking about the stop distance. If that's X, the target distance would be 2 times X, meaning you're targeting twice the profit for the risk. Okay, so that's what I'll be looking for. This is the highest probability kind of trade. There's nothing else that I'm interested in on the Aussie dollar. Okay, if anybody can see anything different on it, please let me know, and I'll analyze it and let's have a look to see if there is in fact a different trade opportunity. But at the moment, I'm waiting for the Aussie dollar to come up to this top line, which is around about the 77 level, and let's see if we can produce a really nice inside candle or an engulfing candle or even a shooting star or something like that, and let's see if we can shoot this, trade this one back down. Okay, so there you have it, Aussie US dollar. Let's move along, have a look at the GBP USD. Okay, let me just zoom out a little bit more so I can see it a bit better. Okay, the big thing with the GBP USD at the moment is that we still have this gap and it has still not closed up. For those of you who don't know, basically the market closed over there on that particular day, opened over here, creating this big air pocket which still has not been closed. So there is a lot of pressure. You can see a lot of the first big green candle trying to push towards this. Candles with big wicks on both sides tend to mean indecision, and the market is trying to close the gap up, but it has not happened as yet. So let's see if we can take advantage of this. Okay, I'm going to draw in a couple of lines just to start off with. Actually, give me a second. There might be a parallel line here. Not quite. Can I fit them in? What do we think? Is that close enough? What do we think, guys? Yes? No? Maybe? Let me know your thoughts. Are we happy with that one touch? These two touches, one touch, two touch. What do we think? Looks good. Most of us are saying yes. Okay, so let me leave those lines in. So that's my first thing that I want to look at. Okay, all right, so if based on what I've already drawn on my chart, if we're going to follow that, then really the only thing that I need to do here is I need to wait for it to come to here so I can shoot up. These are the highest probability type trades that I can find. At the perimeters, try and shoot back in. Now, on the way back down, I could, let me zoom in, I could possibly look for an inside as a trend type trade. If I got something over here where I got this type of situation there, I could shoot it down on my way back down towards this level. So this is one option. We're not there yet. We're very, very close. There's no setups right here. So ideally what might happen is one of these candles may push up like this. It'll close the gap, which is like, it kind of feels like when the gap closes, everybody's a lot happier about it. It's kind of out of mind, it's closed, it's done, it's dusted. I don't know how to best explain it. While there is a gap there, there's always going to be a little bit of pressure. All right, so if we were to get a candle that looked like that, which basically closes the gap, let's just say even the next candle was like this, okay, and the following was an inside candle, well then that's the candle that we would be very happy to trade back into this direction, because now the gap is closed, the market has met its let's say equilibrium, or its feeling comfortable point, and then we could happily try and trade this back towards this edge. Okay, so this is one option. Look for I guess what I'm saying is a trend-based trade inside the channel towards this level. As long as you've got enough distance between there and there to hit your targets, well then that's perfectly fine. Okay, otherwise you're just going to have to wait till we get to the perimeters, and those types of trades at the perimeters are very they're very high probability type trades. Okay. Couple of questions. Give me 1 second. Miles, I don't understand your question. You've typed in what for further clarity. Could you just give me, are we still talking about the GBP USD? Second question here from Hubert is saying, would I sell even though I'm inside a rising channel? Very good point. Okay, so the channel is on the way up, and the question being asked is, would I consider selling at this point here into this direction? The answer is, if the channel is definitely a channel and locked in properly, then, and as long as I have enough room from there to here, then I would say yes. Okay, so hopefully that answers that question. And this one, because it's in the area that it would be occurring, it hasn't occurred yet, but if it did occur in this area, then I would be comfortable to do that. Okay, now remember, that would be a trend-based trade, and the reality is for trend-based traders, they may not even see this channel at all. Their eyes won't see it. They will just be seeing trend, and they'd be trying to trade that type of trade. Trend-based trades for me tend to have a little bit of a lower percentage hit rate compared to when I do geometric patterns. They tend to be a higher win ratio than my trend-based strategies. Okay. All right, so there you have it. That's our GBP USD. So right now, if we're identifying this channel, which we all seem to be kind of happy with, well then we've got to wait to reach the perimeters, or alternatively, if we get a nice setup around about this region, we can trade towards the perimeter. Okay. Another question. The question is, what would I consider using a higher moving average um, to assist me with the trades? Well, no, the answer is no. Really, I don't actually need any moving averages. I just have them on my chart to help you guys define what a trend. Okay, so the reality is when in my personal charts I have no moving averages at all. Okay, I just strictly, the only markings on my personal charts are lines that I draw in, as in support, resistances, channels, triangles, etc., etc. Okay, so having said that, if it makes it easier for you and your eye to have a look at it, by all means use it. Okay, so there's no set and fast rule about it. Okay, all right, let's move along. Let's have a look at the Euro USD. Okay, Euro USD. Can anybody see a trade here? Can anybody see a trade? Okay, let me help you along. There is a trade here. This is when, when you as a trader, like you can see a trade, but you don't like it and you try to ignore it. And this is my psychology, the psychology inside of us saying, do I do this? Do I not do this? Yes, no, etc., etc. Let me show you the trade and let's see what we think. Okay. First of all, that is definitely an uptrend. Okay. And if you look at these two candles over here, that is an inside candle. So if you were trading an uptrend, okay, the inside candle there is a setup, classic setup. This has already broken, okay? So that would mean that you would trade in this direction. Does everybody agree with me? Yes or no? What are your thoughts? Okay, everybody's saying yes, except one person saying no and yes. I'm a bit confused about that answer. Okay, so that is a setup, okay? So I guess let me have a look because I have a short position on Euro USD and I'm trying to remember why I've got a short position on a Euro USD. I think I traded off this level up here in the short direction. Or was there a channel? Did we have a channel or something? I can't remember, guys, because I did get, let me see the high. Give me 1 second. Okay, so let me just read your responses. Okay, someone's telling me there was a daily call on the 7th of June. Give me a sec. Which was also the trading challenge trade. Ah, there it is. I can see it. All right, give me 1 second. 7th of June. Okay, so the setup that Phoebe's referring to was there was an inside candle there, and then it became 3 inside candles because the day after was still inside, and then on the 7th of June we broke that there and we did hit target. Now some of us may have been stopped out for second target over there. Now on the trading challenge I got stopped out, but on another account that I have, I did not get stopped out because I must have had it a little bit further or just a couple of pips further. It's very, very close. And so I still have a short in it. So I'm actually confused about this trade. So technically, if I look at it, we should be buying. Okay, so this is one of those cases where your psychology is going to affect your input. So what I'm going to do is let's vote on it and then we'll take action based on that. So what do we think, guys? What I'm showing you right now, do we buy Euro USD or do we sit it out? B for buy, N for nothing, and if you don't know, just put a question mark in. What do we think? This is very, very interesting. I think I may have affected your psychology in what I just said. We've only got probably 30% of us saying buy. All right, so what I'm going to... Okay, see, I think I've influenced people listening right now. This is a really good lesson for everybody. Look, today we're going to sit it out, okay? But what we should really look at as well is you should have an order of preference in your trading rules on things that you can trade or cannot trade, okay? And for example, for me, I favor pattern trading more than trend trading with this particular method. So my short over here is based on pattern trading, support and resistance lines. My long here would be based on trend. So if I have not been stopped out, then my natural intuition is to just stay in this trade. So I don't want to go in the other direction. All right. So that's the reasons why I'm explaining what I'm explaining to you today. But if I did not have that trade on, then this would be a clear buy. Okay, let me just see if I can find another reason for it as well. Give me 1 second because I think I just saw something else. That's an, if I went to a 4-hour chart, it's more obvious, but you can clearly see here that this is a really nice support level. 1, 2, third touch. And then on the daily chart, if I zoom in and I'll just make it look a bit prettier for you, you also have a second reason to take a buy. Okay, so there you have it, guys. So I guess the lesson here is, trade what you see, I suppose. So, okay, I'm taking the trade. I'm going long. I'm not going to compromise. If I get stopped out, I get stopped out. So here we go. Let me bring my trading terminals. Sorry if some of you do not agree, but I have to stand by my principles, which is trade what you see. And I don't think I'd be doing a good job if I didn't do what I preach. Okay, so here we go. Let me just size up. Let me get rid of this line for a moment so I can measure. It's already broken, so I can go in at market. My stop's going to be about, I'm going to make it 70 pips. If anybody doesn't know how to use the mini terminal, this is an opportunity for you to see how it works. I click on the little yellow button here. Window pops up. I'm going to click on buy. That's what I want to do and pick the risk that I want to take. Because I'm not feeling great about it, I'm going to take, say, $125 risk, which is half of what I normally take. My stop, what did I say? I said 70, so my stop is going to be pips 70. Okay, and my take profit, I'll go 2 to 1, so make it 140, twice that, and then click place the order. Here we go. That's in. I'll bring up my window. there it is, the Euro USD. So I've bought in 0.13. That will equate to roughly $125 worth of risk on that particular trade. Okay, now if you want to do a 2-to-1 exit, while I'm here, I'll just show you how to do it quickly. So what you will need is just bring up you need another chart window and grab your trade terminal here. This is from the MT4 Supreme, so grab it, drag it along and drop it. The little window will pop up, just click OK. And this is what it looks like. Now I've got it on full screen, so let me just minimize it, just make it look a bit better, and I like it like this. This is just a personal taste. Okay, and in there you can see here, there's the Euro USD trade. Okay, now it was a stop of 70 pips and a target of 140. So if I want to close out some of the trade at halfway point, what I do is I click on the little hammer sign, go to automated close, create, and then when order profit in pips is greater than or equal to, now I'm going to type in 70 pips, and then at that level I want to close out 50% of my trade. Now remember, it's 0.13, so I can't exactly close 50%, but it'll try, so it'll probably close out 0.06. Okay, so 50%. And then at that level, what I want to do is I want to move my stop to 70 pips, which will actually be the break-even point, which is the entry. So whatever that number, if I wanted to move to break even, that number must match this number. If I click apply the rules, now notice over here that the little hammer has gone grey. It basically means it's working. So as long as I keep the auto trade has to stay on and I keep my machine on, this will be doing its algorithm and it will be monitoring this trade for me. I can actually get rid of this mini terminal now. I don't need it, but there you have it, and you can tell that it's working. If you concentrate, sorry, you can tell that it's working from this one here, that it'll stay grayed out. The other three orders that I have in the system are not grayed out. Okay, there you have it. Okay, so we've just taken a long on the Euro USD. Does anybody have any questions on that? Let me just read. There's a few questions that have just popped up. Give me 1 second. Craig, yeah, MT4 has to be running for this to work. Okay, so you cannot turn it off. Okay. Every other comment that was made, and there's about 6 or 7 of them, is people just telling me about their personal indecisions as to why they do not want to buy it. So I have the same feeling, guys, but I just decided that I'm going to trade what I see. Okay. All right, let's move along. Gold. Okay. In gold, I have drawn this bottom line, which I like. Okay. And this top line, we traded, this was a daily call trade a little while back. We traded that one. So now this to me looks like it could be forming a really nice triangle. So it's a matter of let's wait, see what happens over here, see if I can trade it back up until we break away, or we keep trading on the inside. All right, so similar story. Right now we are smack in the middle, so I'm not going to do anything here. I need to wait, and I will wait to reach the perimeters. Okay, so there you have it. That's gold. US yen. Okay, let me get rid of this now because it didn't help me. Let me zoom out a little bit. Not much happening here. The only thing, if you were looking for, oh, no, sorry, I take it back. Okay, the only thing I can really maybe see, I'm going to draw in this line, and I'm going to draw in this one here. And now I am going to wait and see what happens. See if I can possibly get a trade this direction over there. That's the only trade that I can see right now. If it was to come back down straight away here, what I might do is, let's say I did this, then what I'll probably do is grab this line and start to move it to that level and try and do it that way. Okay, so the only trade right now based on where I have the lines is essentially this top one here. Okay, so you've got to wait for it here. It might happen around about the 113.50 level. Let's just wait and see if it gets there. If it does, that's when we're looking for a short trade. Okay, otherwise we're not doing anything at all. Okay, let's move along. Euro yen, couple of questions again, one moment. The question is, when I open up an automatic trade, the number of pips, does it calculate it based on the ask or the bid? It automatically calculates it. If you're buying, then it'll work out what do you need to do to close out a buy. Okay, and if you're selling, it'll be what do you need to do to close out a sell. So it automatically works it out for you. All right, so, and either way, the difference will be minute. You're talking about the difference will be the spread, but either way, it works it out for you automatically. All right, Euro Yen. Let me have a look at this one. We could argue that there was a Euro Yen trade a couple of days ago there in as trend-based trade. Okay, it's already moved away, so I wouldn't be willing to trade that right now. But right now, other than that, this chart doesn't look crash hot, so I actually don't want to do anything here. Yeah, okay, Euro Yen, I'm just moving along. Nothing really to say on that one. Kiwi Dollar. Let me just check a couple of things, I think. What do we think, guys? We like it? It's also catching this top as well. We like it? Yes or no? There's no just watching in these classes, guys. I need you to participate with me. Make it fun for me. Otherwise, I get bored and feel like I'm just talking to myself. Okay, so this is one, this is two, this is one, this is two. It's locked and loaded. Okay, so I actually like this one. Looks not too bad. So let me now if I was to trade off this level here, you need to realize that if you were willing to trade off this level 2 over here, it would be what we call an aggressive trade, because we don't really know if this is going to be a turning point yet, because it could just do this and then just continue up, and then all of a sudden you don't have a channel at all. Okay, so remember, trading the second touch is always a lot more aggressive. Now the bottom line is definitely confirmed 1 and 2, so there's no problems along with that. So you know, if you've got the right price action over here, I can understand you would want to trade it, and I do trade it myself off this one. But the third touch definitely is everything's locked and loaded and ready to go. Now, as it happens, there is no price action here for us, so we need to watch it. Just see what happens over here, and let's see if we can get the trade. Now, one other thing that I want you to look out for as well is, give me 1 second. See, there's also a double up here. If I was to grab these 3 points over there, it's a really nice line. Let me just get rid of the channel for 1 second so that you don't get confused. There's also a really nice line there. Okay, 1, 2, 3. Right over. I think I had it on as a chart on the daily call last week from memory. I'm not 100% sure. If anybody remembers it, can you just remind me? And there was 3 touches there. Now, if I get rid of that one and I choose this one, I can still get 3 touches there and a little bit more flexibility. Okay, and also, so what I'm trying to say is I'm really looking hard. I want to short the Kiwi dollar is going to be like a really big trade. Okay, so I'm going to look for any reason that I can find to short it. The other one that I can look for is I can turn this into a double top if it pushes up a little bit further. Okay, so if it pushes up and gives me something there, I'll look for it there. So what I'm trying to say is as follows. I need you to be flexible in what you're looking for, all right? So I'm looking for 1. I'm happy to trade a double top as I'm showing it to you right now. Number 2, I'm happy to trade off that line there if I get something there. I'm happy to trade off this line, which is still the same one, and I'm also happy to trade off the parallel lines. Now, the parallel lines is always stronger than a single line, so that one's really, really good, which is over here. So I'm going to leave these ones on my chart, which is there. Actually, now the way that I've drawn it now, I'm on my 3rd touch right now, which means I've got every reason to trade this. Okay, see the difference that just drawing it a slight little bit different makes, guys? Okay, so now I've got 1 touch, 2 touches, 3 at the top, and I've got 1 and 2 at the bottom. So now I'm really trying to find the trade over here. Okay, I'm even willing to drop into a 4-hour chart to find it. So let me see, 4-hour chart. Oh, it's already happened on a 4-hour chart. So if I show you a 4-hour chart zoomed out, we can see that the touches are still there. That doesn't change, okay? But when I zoom in, look at that. Look at that. Engulfing candle, entry there. There's my target. It's hit T1 already. Can you see that, guys? So sometimes when the level is so strong, this is the time where I don't mind dropping into a 4-hour chart to try and justify my trade. Okay, so, but okay, let's say you didn't get that. Let's see if we can pick it off on a daily. All right, so stand by. Keep an eye on this one. I'm going to put this one on your hot list. There might be a trade coming up here. I really want to short this one. Okay, let me read some of the questions that just popped up. 1 second. Am I happy with double tops if the prices approaches them? Now, look, a double top or a double bottom is always a little bit more of an aggressive trade because until the price moves away from that level, it's not a double top until it moves away. If it moves away and you're on the trade, well then you got the trade. If you take it and it doesn't move away, well then you end up taking a trade that there was no reason to take. So it's always a little bit aggressive. I don't know if that makes sense. Let me try and explain it a little bit better. Let's say here, double top there. Let's say at this point I trade in this direction, but then the market doesn't go down, it actually continues to go up. Well, then when you go back and look at your trade, you'll say, well, why did I take this? And because there was really no double top at all. So it's always a little bit more of an aggressive trade. Okay? That's all I'm trying to explain. Okay. All right, let's move along. So Kiwi dollar is done. US CAD. Remember we were tracking this channel, guys? See, look at that clean break. Did anybody trade this breakdown? If you were trading the channel break, you could have been justified to take a trade around about this level somewhere. Once we've cleared this low, you could have taken that. That's one way to do it. The other way is you could have taken the trade from that level when the trade closed. Again, trading this type of trade is psychologically difficult. Okay, if I remove the channels, you can actually see that there is a trend trade in there. Let me remove the channel and you'll see it better. Oops, let me just go back. So trend coming down, pulling in and continuing. Okay, so these are all the things that you need to consider and think about. Let me just see what we can find for us now. Okay, I like this line. There's no trades here though. What's this? US CAD. Okay. Alright, I'm just going to leave this line here and let's just see what happens. At the moment there's nothing. And I really cannot see anything else on this particular chart. So that's all I've got for this one. Let's move out. Okay. Oil. Okay, let me extend this line more now. I already had it on my chart. Let me just extend it. It may come into play. And let's zoom in back in. So what I'm looking at, I'm seeing, will that reach this level or not? Okay. Remember we were trying to find that one. We got the big engulfing candle. This is an example of, it was a huge candle and it would be easy to think this is not going to go down any further, but look how much it's still gone down after it's produced that huge engulfing candle. All right. These are good examples to watch just so that we can develop belief and develop understanding of the principles, and essentially the pattern is playing out really, really nicely. So to be honest, if I had a choice here of a trade, I would prefer to trade this one down here more than off that line there, because I favor these channels much, much better, and the symmetry on this particular pattern is so nice. So let's see what happens. Okay, if there's anybody that's really, really aggressive, you may want to try and trade a double bottom here. I don't particularly like that one. This tail doesn't sit well. I see that more like a line that's a little bit with an angle rather than a flat line, so that's why I'm not favoring it, but I am looking for something in this region. If I get what I'm looking for, then I'm happy to take that trade. All right, there you have it. There's oil from me this week. Okay, I think I've covered everything. Let me go back and summarize. If you have any questions, just type them in. Aussie dollar. We're starting to track a converging triangle. Both of those lines are locked and loaded. So let's see what happens if we reach this level around about the 77 mark. Let's start looking for shorting opportunities. GBP USD, we've just drawn in a new channel. We could possibly get a trend-based trade over here moving down. Alternatively, you've got to wait for the channels and for an opportunity to take trades as such. Euro USD, we've actually taken a long position based off an inside candle on a support line, and which is also a trend-based trade. So we are long Euro USD. Gold, we're tracking a converging triangle. We're pretty much in the middle of it, so we cannot do nothing until we reach one of the perimeters. Same story for the US yen. Euro yen is a chart we're not interested in this week. Kiwi dollar, we've just drawn in a falling channel, and we are at a crucial area, and I'm desperately trying to find a shorting opportunity. Now, here's an important point, okay? When you trade as a portfolio as a whole, and the point is the following: we are already long Euro USD, okay? If we go short Kiwi dollar, we are somewhat semi-hedging that trade, so it's not 100%, but it balances out my portfolio. So this is one of the reasons why the pairs that I trade, if I look for what I look for, and I don't hesitate. Well, I did today, but I try not to. I just try and trade what I see. It balances itself out. Okay, US CAD. Or was it US CAD? We are approaching this line. Let's see what happens. And oil, we are inside a nice channel. We are waiting to reach the perimeters. Okay. Couple of questions. Okay, someone's telling me I can redraw my WTI channel. Let me just muck around with it. Okay. The best that I can get it. I think this is about, oh no. I think this is the best I can get it. I don't think I'm there yet. I can see what you're saying. Like if I push it up a little bit like this, and I can try and jiggle it. I don't want to go into the colored part of the candles. Let me just zoom in. This is the best that I think I can get it. Okay, that's about the best that I think I can get it, but I feel a bit more comfortable here. I just want to catch that second top a bit better. Okay, there. That's the best I can get it, and I'm still not where I want to be. So there's still a bit to go on that one. Okay, another question. Do you have a different configuration than the default on my MT4? The Kiwi dollar last up move is like let me see, Kiwi dollar. Okay, Craig, what you should do is, I'm on a daily chart first of all, okay, and just you can zoom out more and zoom in. So if yours looks like, I don't know if it's going up too much, you can hit the little plus and minus to try and get it as you like it, but you can see what I'm doing to my charts to move them around. See if that helps you, okay? Okay, all right, I think they're all the main questions that I've had. Does anybody have any other questions before we wrap up for today? No, we're pretty good. Okay, well, if we don't have any other questions, I will wrap up for today. A couple of questions being asked about when will I do more strategy training. If you go into the portal that we've given you access to via the CSC website, we've got about 7-8 different strategies in there which are full in depth. Go through it. If you have any questions on them, you are able to email us or ask that question when you come into the Monday class, and I will answer it off topic, so don't worry about it. So if you go in there and you go through a particular strategy and you have a question on it, please write them down. Come back on a Monday and I will answer it for you, or you can email us and send me a screenshot, of course, and I will answer it for you that way as well. I will do it from time to time. I've just got so much on my plate at the moment. I'm trying the best that I can. My time is limited right now. Okay, but we have given everybody access to it, so you can go in there and like I said, if you something that you're unsure of, just write the question down and bring it on a Monday class. Even if it's off topic, I'll make time to answer it, or just take a screenshot and email it to us and I will answer it for you. Okay. All right, if that wraps up, we'll call it a day. Of course, you can hear my voice every day on the daily call. Hope you're enjoying those charts of the day. We've had actually a really strong month this month. I think we're on one of those runs where everything's turning to gold. So let's see if we can keep it going. Remember, the main purpose of it is for you to track a live moving market and get an understanding of how it develops. And look, the best lesson I think today, which is as much a lesson for me as hopefully it is for you, is trade what you see, okay? There's going to be times that you doubt yourself, and I've doubted myself today, and if I get stopped out, I don't actually care. The point is I actually feel better that I've traded what I've seen and not what I thought, okay? I'll leave you on that note. Have a great week. I'll talk to you tomorrow on the Daily Call. Bye for now.